Coming up, the Reserve Bank leaves interest rates on hold but cannot rule anything in or out still. The market's on US election watch, and the CEO of Domino's resigns after decades in the business. That's all next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Tuesday, the 5th of November 2024. The Australian share market did Madeline, why did the RBA leave rates on hold today?
Look, I don't think it was a shock that the RBA left rates on hold. Definitely an expectation across most economists, but ultimately nothing's really shifted enough to see the RBA start easing interest rates. And indeed, the governor was asked about what will it take to see the RBA actually explicitly consider cutting rates, and we're just not at that point yet.
Does it surprise you, though, that the governor is still saying that the board is not ruling anything in or out?
I think we were a bit surprised that they didn't wind back their language quite as much as we were expecting. So we thought they'd move slightly more dovish, or you could say less hawkish in their language, particularly in those final paragraphs, but we didn't see that shift today. So we were surprised about that. But you do have to remember, when they're saying they're not going to rule anything in or out, it goes both ways. So it's also about whether they're considering easing or not. We know in the past it's been around whether they're going to consider a hike or not, but you can also look at it the other way.
It'd be great if she actually mentioned which way they were looking at, but they didn't. What is it about underlying inflation then that the RBA is really worried about?
Yeah, look, it's tough at the moment to interpret the inflation numbers because we have these cost of living relief measures. We've got the electricity rebates. So they're mechanically lowering headline inflation, which is the number that we all tend to look at. And that means that it's a bit harder to actually see what the trend is in inflation. So because of that, the RBA is very much looking at trim mean or underlying inflation in order to get a better sense of what the inflation policy is here in Australia, and it does seem like it's going to take quite some time for it to return to the RBA's target band. We at ANZ don't expect it to be back there until mid-2026, and the RBA don't expect it to be back there until the end of 2026.
So what exactly do you think the RBA is waiting to see before it does indeed start cutting rates? Because as you mentioned, while underlying inflation isn't expected to hit the RBA's target, midpoint target by the end of 2026, surely rates will be cut before then.
I think people with a mortgage will be definitely hoping for that. And it's one of the questions we get asked a lot about is, do the RBA actually need to see inflation back within their target band before they start cutting rates? And the answer to that is no. What the RBA do need to feel is that inflation is going to return to target, and importantly, that it's going to actually stay there. And that's the thing that Michelle Bullock has highlighted time and time again. It's about that sustainability and that sustained return to target. And in order to think about that, we often look at the inflation pulse. So we look at measures like the 6-month number for inflation because it gives us a sense of the trends. And what we expect on that 6-month number for trim mean inflation, that it should be annualizing at 2.95% by the end of this year. So that should actually set the scene for the RBA to start easing rates next year.
Okay, so wrapping that up then, when does ANZ expect the first rate cut and why?
Look, so we're expecting that the RBA will keep the cash rate on hold until February next year. So we expect them to start easing in February, and it'll be due to a few things. They'll see that inflation is slowly on that path towards returning to target. We also expect that a bit more softness will creep into the labour market. We know the labour market's incredibly strong right now. We've had surprise after surprise with the labour market data, all upside surprises. And we're seeing that some forward-looking indicators have actually turned. So real signs of resilience in the labour market. But we do think that that 6-month annualised trim mean measure, so in other words, you take the 6-month average of trim mean inflation, times it by 2 to get an annual number to give us that inflation pulse, that should be back within the RBA's band in Q4 this year.
So how would you describe the state of the economy? If you listen to the RBA would be implying that, hey, it's still pretty strong, that there's some strong demand factors out there, but the government will say, hey, everyone's kind of struggling with cost of living pressures.
Yeah, there's this real bifurcation going on in the economy right now, because when the RBA is thinking about demand, they're thinking about it in an aggregate sense. So that's the private sector and the public sector. And we know at the moment that public demand is tracking at a much faster pace than private demand. And you see it in shopping centres. When you talk to people, people aren't feeling too good at the moment. They're not spending money. Retail sales is pretty subdued. And that private part of the economy has really waned. But the challenge for the RBA is they're thinking about demand as a whole rather than in bits and pieces. So at the moment, we're in this situation where supply is just not quite keeping up with demand. Now, that gap has narrowed, but we're still on a path where we need to see it narrow further.
And just finally, given that we do have the US presidential election tomorrow, the fact that the RBA said today, I think Michelle Bullock said it in her media conference, that it's still too early to consider the inflationary impacts of the outcome of the US presidential election. Is it fair to say then perhaps that there won't be a major impact then if the board hasn't implicitly spoken about it ahead of time?
I think there's just so much uncertainty around what is going to happen that they're likely to want to take some time, see who gets in, see the makeup too. Is it going to be, a situation where we see a clean sweep, or is it going to be a mixed Congress, for example? So I think that it's really going to be about the composition and whether people can actually get their policies through. And in terms of the impact on Australia, yes, it's going to definitely have an impact depending on what happens. But we do have to remember too that we don't do that much trade with the US. So it's more likely to be third-party impacts.
Now, Market Day on the SBS On the Money podcast.
The market was expecting no change in the underlying cash rate, and that's exactly what's happened. The market has hardly moved on the back of the announcement, only small fluctuations really. So a lot of it was already factored in. The RBA's made no secret of their plans. The government hasn't either. So the market has fully expected it and priced it all in.
What about the US election? I'm guessing all investors are looking to that. How's the market positioned for it? What is it expecting?
Yeah, look, over the past month, there's been a bit of fluctuation across most major indices around the world. If you look at things like the S&P 500, the NASDAQ, even something like the ASX 200, what you'll find is that whilst it's volatile during the past month, it's largely ended flat. So as the US presidential race at the moment is really too close to call, a lot of people, investors in particular, are sitting on the fence, really waiting to see for a clear indication over the next couple of days. So where we're looking at the moment is it's really a wait and see, but who knows where it'll end up tomorrow.
Well, I guess I do want you to look into your crystal ball, right, and ask you how you do see the market playing out tomorrow, especially in terms of equities and perhaps the currency markets too.
Yeah, look, we're based on our time zone tomorrow. A lot of the initial indication from the polling results in the US evening will come out during our trading day tomorrow. So we will have an operating share market as the initial indications are released in the US. So it will really depend on the numbers. And it will also depend on things like Trump's rhetoric or any early election claims when the numbers aren't clear. That can obviously be a bit of a negative for the market. What we will probably find if the election is as close as expected is that the numbers just won't be clear tomorrow and probably the day after. Hence, we might see more fence sitting by a lot of investors and really just wait for the US to come in to take the lead on the following day. Currency-wise, though, the US currency has been strengthening over the past month. The US dollar, in terms of Aussie dollar, we've gone from 67.5 down to 65.5. I think it will continue to range trade in this area over the election cycle. It really drives off policy, and policy hasn't changed yet. So unless there's a change of government, I don't think we're going to see huge movements in the underlying FX rates.
Okay. To what extent, though, do elections ultimately impact markets over the longer term?
If you look back at some of the data over the last 40 years of US elections in the share market, you'll find that in the week following the US election, the share markets around the world have generally been negative. So the prices have fallen over that first week. That said, a month later, and by the end of the year, the average has seen that the share markets have been in positive territory. So what it means is the initial wait for the election results have been a bit volatile for the markets and have generally been negative. And then people digest the new election result. They focus on the new policy that's going to be coming in, and then they refocus on the investment case, and hence you get a turnaround in the market.
In terms of our market, any company news you're keeping an eye on today?
Look, today is just a lot of information. We have the RBA announcement, as we've said. We've got the Melbourne Cup and we've got a US election. So eyes and ears are firmly elsewhere. In terms of some small company announcement today, Mineral Resources is still certainly in the news. It's up around 5% today. That said, it was down 10% yesterday. The only other news worthy of mention at the moment is that the CEO of Domino's has retired. He's been with the company for over 40 years and has been the CEO for the last 22 years. So he's certainly overseen a lot of growth in the company, and that's pushed the price down on his retirement.
And finally, where do you see the opportunities for investors at the moment?
Yeah, it's difficult to say with a lot of geopolitical risk at the moment and asset prices being so high. But if you look at what's moving and where some of the value is, if you look at the price of gold at the moment, it's well over $2,700 an ounce. So who benefits from that? Well, obviously people investing in gold bullion, but second of all, gold miners, who obviously mine gold out of the ground and obviously sell the bullion. If you look at some of these gold mining companies, they're all in costs to get the gold out of the ground, to get it into a saleable format as a gold bar, costs around $1,500 per ounce. So every bit or every dollar that the gold price goes up, these gold miners are just making increased profit. Their costs don't go up based on the price of gold. So this surge in gold price to over $2,700 an ounce is just extra profit for the underlying gold mining companies. And they've been moving up, but not in par with the meteoric rise of gold. The only other thing worth noting at the moment in terms of portfolios is with US election, with geopolitical risk, everything happening at the moment, it certainly pays to be diversified in your portfolio. Now is certainly a key time. You never fully understand where any risks or downturns might occur. So being fully diversified at the moment is kind of one of the key metrics for any investor.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.